Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute. It's March 17th, 2013. The markets have been getting blasé about their rally. I've been getting blasé about the rally. Dow Jones just notched a 10-day winning streak. What does it all mean? Well, one thing it means is that traders have been trying to copy the first quarter of 2012. It worked last year, so why not this year? More importantly, everyone else seems to be doing it, so why not me? However, there is a fly in the ointment this week, a fly that goes by the name of Cyprus. The latest country to receive an EU bailout is the third smallest and has a population about one-third the size of Brooklyn. But it is shaking markets as we head into Monday because the bailout package involves a bank holiday and a tax on all savings deposits in Cyprus banks. Well, the bailout isn't that large, only about $12 billion, but it is another bailout and so unpopular with the EU members that have to foot the bill, in other words, Germany. One of the main reasons for the tax is the conviction that a lot of Russian money is laundered in Cyprus. So if they didn't extract some sort of pound of flesh, the German newspapers would be posting page-one headlines about bailing out Russian gangsters. The downside of that, however, is the question of whether the tax will start a run on banks in Cyprus, where there are already scenes of people queuing at cash machines over the weekend, or in other countries in the EU that are also relatively weak. For example, would people in Portugal or Spain decide to shift deposits to Switzerland or Germany in case the same thing happens to them down the road? A lot of UK citizens also have deposits in Cyprus, so the British aren't too thrilled with the solution either. The tax was a substantial hit, ranging from 6.75% to 9.9%, and has mobilized a lot of hostility in market circles, German ones too. Now, some will hark back to the Italian elections a few weeks ago, which caused a near 2% pullback in markets, yet was already reversing by the second day. Whether dip buyers will rush in again, though, this time is harder to say. The thing that equity markets fear the most is a credit problem. It really is kryptonite for stocks. The Fed is meeting this week, and there's still the European Central Bank lurking in the background, so this is a tough one to call. Ordinarily, traders would be getting their buying shoes on for the Fed meeting, but there isn't much it can do about Cyprus or the EU. So the next move is going to be called from Europe. Stocks have been overbought, but the momentum was still on their side through the end of the quarter, or at least it was until the Cyprus mess arrived. That overbought status could add a little extra juice to the downside, or EU officials may be able to put out the fire in a day or two. It's really a guess right now. I will say this though, if the situation does go the wrong way, and I'm not saying it will, it could turn out to be very ugly. Something to think about. I'm Kevin Flynn, and thank you for listening to Avalon's Market Minute.